Baker Hughes secures orders to provide reliable and efficient power to US data centers.
This is the Daily Market Rundown live from the Tradelo trading floor. It's March the 13th, some highlights from today's show. Trump hits EU with tariff threats, the euro dollar is now in play, and the S&P 500 is a tactical buy. Good day, traders. Welcome. It's Thursday, the 13th of March. Let's get stuck straight into it. Looking across the board, of course, it's relatively muted in Europe. Of course, there's a couple of key headlines that are coming out. We'll talk about those in a bit of a moment. But right now, it's very, very calm across the board. There's not a great deal going on. We've seen a little bit of a continuation of yesterday's flows, ultimately, where there's a little bit of initial risk-taking that then gets unwound. And so it does seem like we are going to have a repeat of yesterday's session. With that in mind, let's get stuck straight into it and talk a little bit about some of the key headline news. Now, firstly, of course, the German Bundestag is sitting down discussing currently this idea of a fiscal reform as well as an infrastructure spending bill of around 500 billion. This is sort of a back and forward thing where we are getting a number of different headlines coming across the board. And I think the key takeaway ultimately is that we don't have to worry too much about this getting rejected today, because this is very much just a debate that's going on in the Bundestag. So they're basically debating it, and then of course next week at some point, either Tuesday or Thursday, we'll actually get a vote on this fiscal reform. Now, in terms of what is key, what actually moves the markets, the reality is that the Greens kind of have already given their sort of signaling that they are going to go ahead with this. There's a little bit of horse trading going on where they're trying to just pressure the CFD to give them a little bit more in terms of the infrastructure spending, so that they can go back to, of course, their voters and say, look, we got you something nice. So it's very much the market is kind of brushing off any negative commentary around it, and ultimately the market now just wants to see that fiscal reform happening, and then we're likely to see a continuation of some of the flows over the course of next week. Now, with that in mind, we've of course had Trump come out late yesterday and say he is going to be targeting the EU because of their retaliatory tariffs, and we've now seen him come out just recently over the last couple of minutes, sort of imposing some degree of 200% tariffs on the alcohol industry in Europe, because the EU effectively put tariffs on bourbon coming from the US. So it's again this sort of continuation of tariff flow news headlines. The reality is the market's not really paying much attention to it, which typically when markets get like this, what it suggests is they're a little bit fatigued. Okay, this does happen. Typically, if you are trading headlines, when headlines first start up, of course, the markets need to reprice. But now the market's going into that sort of idea of a little bit of fatigue, where they're kind of tired of all the back and forward. And so we're actually not really seeing the market present too much opportunities in terms of what's being said. However, I think the key takeaway is that ultimately Trump is retaliating against the EU. We spoke about this earlier this week. And what that does mean is I think the euro is now in play. It's a market that's been pretty much out of play over the course of the last three sessions, but it's now back in play simply because I do suspect we're going to pair some of the recent bid to the upside. Now, we saw a little bit of sell-side activity come in yesterday. Note we are back below that weekly high, and I think that's crucial. The fact that we kind of spent Monday, Tuesday above that weekly high, we're now back in around that weekly high, suggests that we should see a little bit more profit taking in that euro. I do suspect this is a case of not necessarily how low it drops, but effectively where those buyers are going to be willing to re-engage. Now, I said this yesterday and the day before, the euro is very overbought at these levels. Doesn't matter how you want to look at it, doesn't matter what metrics you want to look at, it is very overbought, and the dollar, of course, is very, very oversold. So again, a little bit of a move down to that 108. I think that's probably going to be the first area of interest on the chart. It was, of course, the first pullback after a very, very extended breakout move from the euro. It's also sort of the first time we will test a low volume area. In other words, an area that very much the market trended through and it didn't want to settle around at. So keep a very close eye. I think we should drift our way back down towards 108 today in the future space, perhaps even a little bit lower around 107.75, but there I think you're going to get some really good dip buying opportunities, and in fact I think those will be taken up quite aggressively by buyers. That being said, if we do break below that 107.75, I think the next stop is going to be that 107.20 where this turquoise line is. I think that ultimately will present a fantastic buying opportunity, and very, very key in terms of market profiling. If you trade profiles, this area from 107.20 all the way down to 105.80 ultimately is what we call a low volume area or a trend breakout area. So that should remain. We should not be trading in below 107 if this market is now going to stage a significant trend higher towards that 112 mark. So that is the euro. I think it's a market in play, sell side opportunity all the way down to 108, and then a buy opportunity, and of course always be nimble with that. Now with that in mind, we've got PPI in a couple of minutes. And I think the only thing really to take away from this, if you traded the CPI yesterday, it was one of those events where there was a high degree of expectation. There was a lot of chatter about, if we miss, we're going to see, the S&P up 1.5 to 2% on the day. And the reality is, the analysts were wrong again. Okay, the reality is no one really has a clue, and the market was actually quite docile given that data. I would have expected quite a bit of a bigger bid in the S&P yesterday, quite a bit more aggression to the upside, but effectively the market just feels very, very exhausted. And of course, we do have the roll going through in the S&P, Nasdaq, and Russell. So there's going to be some funny moves, and I think we did get that yesterday in the S&P. It was a move that sold off quite a lot more than I thought it would have. But again, that's got a lot to do with the roll, and ultimately, well, once that roll clears a little bit later on this week, it should then be back towards more technical trading markets. That in mind, of course, the PPI will get some focus, but like I said, it's not going to present the kind of volatile opportunities that we're expecting. So just be cautious with it. It's not a data point you want to chase. Whether it beats, whether it misses, be very, very careful. Lifting highs or selling into lows, because like I said, CPI yesterday really had a lot of attention, and it didn't actually do what market participants thought. Okay, with that in mind, our attention now turns to the S&P. I think it's a market that does present very good tactical buys. What do we mean by tactical buy? Well, we're very much in a downtrend. We're very much ultimately price pressure is to the downside, and we can see that pressure, but that doesn't mean we can't fade or buy the market. And a tactical buy just means the risk reward makes a lot of sense. Okay, I think one of the traders said to me earlier today, and he framed it quite nicely, which is the risk reward on being short right now after the 10% down move in such a short space of time is very limited. Okay, there's very limited downside reward, and in fact, I think we are repeating a very similar pattern to what we had last week. Okay, now I'm going to reference this part of the chart. This is an hourly chart, but you can see the S&P found some balance between that 45s up to 76s. It sort of had this series of dip buying, ultimately extended through it, tested one last time, could not get back above, despite a number of attempts, tested once, and then ultimately extended to then accept value low. Okay, almost an identical pattern play now. We've accepted value for the last 3 sessions. The market's been bought up 3 times. I suspect it's going to get extended again today. It's going to test in those weekly lows, but this time I think it's going to fail quite quickly, and it's going to get bought quite aggressively. Now, very, very important, watch the price action off that low. I'm expecting quite an aggressive V reversal, that if we were to get back up above that 55.60, I do expect we will catapult our way a lot higher, all the way back up towards those yesterday's highs around that 56.40. Okay, so really, really good tactical buy there. Risk reward wise, you're not going to need more than a 10-20 handle stop, and you are going to be ultimately targeting a good 100 handle move. So 5-1 risk reward, very good tactical buy opportunity. And then finally, gold is back in play for a number of reasons. It did finally break out of this little bit of a range yesterday. It did it in a trend-like way. So we can see that initiative on the hourly chart. It's come back. It's retested that previous zone, which we spent the last 4 or 5 sessions in. And it now looks like it's on track to go back up towards those record highs. But caveat, gold is very, very overbought. Okay, it's still an overbought market, and it doesn't really have a catalyst to be going higher right now. Okay, like I said, inflation break-evens have been squashed. Ultimately, there's a growth concern, so I'm not sure why gold is up here, except for a little bit of a risk, sort of safe haven type asset. But apart from that, of course, obviously dollar's weakened quite a lot, so that's probably also giving gold a little bit of support. But today, with yields pushing a little bit higher, with ultimately the dollar pushing a little bit bid, gold is vulnerable at these prices. Okay, I think it's a very, very dangerous long year. I think, yes, fine, you can be targeting sort of those previous highs and possibly even a little bit of an extension, but I think an easier play ultimately is going to be once we push back in below that weekly high. Okay, why is this a relatively relatively good tactical play? Well, again, because the market spends such a long time accepting all this trade in this area, if we are to get back below that 29.40 area, it's going to very quickly navigate its way, not just towards yesterday's lows, but even lower. Okay, keep in mind, everyone bought through that breakout yesterday. The market is net long here. Should we get back in below those 40s, those longs are going to come unstuck. We are going to very quickly unwind our way all the way to the downside. Okay, again, a very good tactical sell side, but note we are waiting for the market to close back inside that range, and then we initiate those shorts. Okay, that is a wrap then for today. As always, if there are any other questions, do post them in the Discord channel. I will be available to answer some questions you might have. Otherwise, manage that risk today. Good luck out there. Go make some money.